Basant Maheshwari joins us. And Basant Maheshwari, good morning. Thank you for joining us. Do you like this reputation that when we think of HFCs, we remember you?
Nikunj, I can't hear you. Can you increase the audio?
I'm saying the fact that you bought into HFC stocks and you pretty much symbolize, what the potential of HFCs is. So do you like this reputation? When it comes to Titan, we always associate that with Rakesh Junwala. Lupin, we always associate with him. But markets have now started associating or calling you the HFC guru.
No, it's all courtesy Nikunj Dalmia actually. So actually anything which is growing, I like to chase it. So because there are two ways of looking at it. One is price and one is earnings. So somebody wrote to me, why do you look at the price? Why not the earnings? I think it's more like looking at the horse and the cart. It's the earnings that drive the price. And as long as the earnings are there, the price is going to go up. So of course they're expensive. They will go up. But right now we are holding stocks that is 100 trailing PE. We bought it when it was 60, 70 trailing PE. So it's not that I like buying 100 PE stocks, but if the 100 PE stocks is going to make me 40, 50% every year, then obviously I don't mind buying them. Similarly with the HFC space, I mean, the two stocks that we own, I think they're going to grow at 40, 45%. We have been discussing this for so long, but I think we have to focus on growth. See, growth in a bull market is like, steam in a sauna. So if there's no steam, there's no sauna. So if there's no growth, there's no bull market. So money is going to chase growth. So then we can say, for example, a stock like Bajaj Finance, not a recommendation. We are invested there, disclosure obviously. So it's abnormally priced, you would say. Graph Finance at 200 rupees. When we used to own it, it was 10, 12 times book. Now it's 500, 2.5 times from there. So people have gone fed up saying Graph Finance is expensive. Nobody talks about it now. So I think over a period of time, people get fed up saying it's expensive. So it's like that. I think we should focus on earnings. We should focus on growth. Without earnings, without growth, I mean, a stock is like an orphan on a street. Nobody bothers to look at it.
Right. Basant, Nikunj and I were chatting yesterday whether Bajaj Finance is the new Bajaj Finance. So do you continue to deploy fresh money, more money into the same stocks, because that is where growth is there, that's where visibility is there, and that's where you have earnings and past performance too?
No, that's correct, but there's a change, So when you start, you can deploy you can put in higher allocation, but when the price goes up, then you tweak with the allocations. You look for a new growing company. Another thing, what you do normally is all these stocks give you 7, 8, 10% corrections. Aisha, if you just go and see, Page Industries, a stock which we owned from 2009 to 2014, it never fell more than 20% even once. I don't recall, obviously. So if it's a leading bull market stock, generally, unless there's a demonetization or something like that, it won't fall more than 20%. So if from the highs the stock has fallen 20%, then you find buyers. So basically we want to buy it, say 10, 12% down from all-time highs. So then you can say, okay, it's going to fall 7, 8% more. But that's the time to actually put in money. And obviously we put in money and we don't pray to God that we have put in money, because already so much money has been put in. If I'm not bullish in the stock, I should be selling my existing companies, what I own. So it's wrong to say I can't buy more, because you're already invested there. So obviously the allocations vary. You can't be as aggressive now as you were 1 year back, but then you find new stocks to bet on, and that's how life moves on.
Seems like,
just this point which Basant talks about HFCs, please. And my limited point here is that I understand that the low-cost housing has a great highway. You can talk about 5, 10, even 15 years, because India as a society or India as a country, we don't own houses. The population is growing. Urbanization will ensure that the housing demand will stay intact. But now what I've realized is that within the HFC space also there is a lot of volatility. And the eye-opener for me, Basant Maheshwari, was when I looked at numbers which came from Repro. They had this edge that we will not give loans to the salaried class, we will give it to the non-salaried class. In came demonetization, bit of a disruption from GST, and then numbers were slightly shaky. So whereas the big picture for HFCs is great, but I'm getting a big variance within companies there.
No, what you say is correct. Of course, we don't own Repco. Tell me. Yeah, what you say is correct. We don't own Repco. Obviously, we bought Repco first day, first show during the IPO, and we held it for a long time. 2 years back, we exited out of it. Within the space, there will be gaps. But about Repco, a company, for example, it's not just growth. Let's take a HFC. Let's take an NBFC. So ultimately, it's a commoditized business. If somebody gives a loan to me at 1 percentage point lower, I will go to that person. So you have to attack your business from all sides. One is the growth, the other is your cost of borrowings, the third is your geographical diversification, and there are so many things. But Repco, which we realized over time, they just focused on making 20-25% growth, and they were not going at lowering the cost of deposits. They're not going for geographical diversification the way they wanted to. So there will be gaps, and tomorrow what we own today, they might have a problem. But then, if you're following a company very closely, Nikunj, you get these hints 2, 3, 4 quarters before the market. So, but for that you have to follow the company closely. So Repco, of course, by chance we sold out and did whatever. But right now we are not interested in Repco. It was an ex-girlfriend, and we don't look at exes now.
No, Tanvir, go ahead.
No, I was just, because Basant made the point about, while he owns Bajaj Finance, he's not being aggressive just as yet because he thinks that, the market has run ahead of time. And I was just reminded of Nikunj and my conversation with Harvard Marks a few days ago, where he also said that this is not perhaps the time to be aggressive. Even if you are fully invested, maybe caution is the right way forward. Do you also share the same view, or is it just from a valuation perspective that you're kind of stopping back and saying, look, this much and no more?
No, I mean, like I said, normally a leading bull market stock doesn't correct more than 20%, 20, 22, 23%. So Canfin corrected a lot more. Of course, we are invested, no recommendation now, because Catamaran came and dumped the entire stock during the demonetization time. But if a stock is going to correct 20% from the all-time high, and if there are two ifs running here, and if it's a leading bull market stock, then we try and get in at 10, 12, 13% from all-time highs, and we say, okay, we'll see whatever comes. But the thing is, it's not that once you've bought a stock, you can't sell it. So the moment the growth stops, it's like the music stopping and you don't have a chair to sit on. Either you push someone and sit on a chair, or you say you've lost the game. So we normally get out of the room the moment the music stops. But that's a very hard thing to do, because when you want to sell a stock on earnings disappointment, you will be selling it 10, 20, 30% from the all-time highs. So that's okay as long as you have a big vision and you keep moving ahead in life. But the point about buying cheap is all well understood when you get a chance to buy cheap. What if you don't get a chance to buy cheap and there's only selective bunch of stocks that are doing well? We like to chase earnings, like I keep reminding. So if it's expensive, we buy it. Of course, I'd like to buy it cheap, but what to do?
What is up with your new phenomenon, first day, first show? I've been told that you bought Avenue Supermart or DMart on day one of listing. You bought AU Financials on day one of listing. So, is this just a coincidence?
No. I can't take stocks. Avenue is out in the public, but Avenue is again, no recommendation. It's again one of those stories where it's the only company outside of the NBFC space which is going to grow at 40%. If you just go and look at the business model, I think in every 4 years they double their store count. So 4 years, when you double your store count, you get 18% growth. So existing stores give you 20% same store sales. So 18 and 20 goes to 38. With a little bit of change in product and change in the SKUs and all that, you can add 4, 5, 6% there. So it looks set for 40-45 percentage point CAGR over the next couple of years or next 2-3 years. It's run well ahead of its fundamentals. I can't write a value investing thesis on that. But again, the same thing is, right now it has about 130-140 stores. Up to 300 stores, it's very easy for them to expand into India. 300-350 stores. Till then, I think we're going to get a good price. And if growth stops, obviously everything is going to stop. But we bought it obviously at first day, first show, and we are completely bullish. And we bought it last month also. So that.
My only thought process with you next up is, how are you looking at value in this market? Do you think that given where we stand on the index at 9,900, 10,000, that we are pushing towards the higher end of the valuation range. So finding value is a little harder.
No, it's very hard. Let me admit, there are two facets to value. One is what is there, which is the balance sheet, and one is what can it be, which is there in the future. So what is there, value isn't there. So there's nothing, if you can just pick up a balance sheet and say, I want to buy this company because this is there, then I don't think that opportunity exists right now. But what can it become? That part of value is there. And for that, there's a leap of faith. For that, there is that tailwind thing which I keep talking about, because you can't be buying a company, for example, the IT space, for example, there's so much of headwind. You can't be buying an IT stock and thinking that some gem in the dust would come into my hands, because there's so much of headwind. So that's why we talk about tailwind. So if you just go and see for 1.5 years, I think the BankX has delivered from February 2016, I haven't worked out the numbers, but it's delivered about 50% growth, the BankX from February 2016. So there is momentum, stroke earnings momentum, stroke price momentum in the financial space, and financials are globally recognized to obviously and always do well in a bull market. Of course, they might do very well or they might do well, but they don't underperform a bull market. So except for the financial space, I can't see value in the segment, what they can become. But what is there, I can't see value. When I say what is there, it means you pick up a balance sheet and you say, it's got book value so and so, this is a trailing P of 5, this is a trailing P of 7. Those days are not around. And you can't get those kind of bets in a Nifty at 10,000. See, there's so much, and the liquidity argument obviously. So we get 5,000 crores every year in SIP, which is about $10 billion every year. So 2-3 years back, we were talking of 20 billion annual FII flows. So half of that, we are matching it up with SIPs. So 50% of the F2 flows are being matched up with the SIPs. So I think the market should go up. Why it should go up, I don't know, but it should go up, and we are very, very well invested there.
Basant, it is so true that value is a function of what you define and what you believe about future growth is. And the best investor in the world, which is Buffett, he's also made some investments which sometimes may look very expensive because they're done at a premium to the closing price, but then he believes that for next 8-10 years he sees value in them. So Basant, without getting into recommendations, buy, sell or hold, I want to understand your thought process on AU financials. What is that you are able to see for AU financials which currently markets are not able to indicate or predict? I mean, you beautifully explained to our viewers that DMart or Avenue Supermart gives you this great visibility because of store expansion. What is this visibility which is making you excited about AU financials?
So you want me to take any company and talk about it?
AU financials, I'll be specific here.
Okay, so on a financial, first thing is, as everybody knows, our per capita income is $1,500-$1,600 per GDP, per person, right? So over the next 3, 4, 5 years, it's going to go to $3,000. All this while, when you have $1,500-$1,600 per capita income, what you do is roti, kapda, makan and cable TV. So the moment you go to $2,500, $2,600, $2,700, then you have a stream of cash flows which can be lent, against which you can be lent against. So there's an entire boom happening in terms of the disposable surplus. So you won't be spending that money, but if you get an assured cash flow of some surplus, because you won't get money to buy roti, kapda, makan, you get money as loan because only when you have a surplus in your income. So that surplus moment is coming in the Indian GDP space. That's a big picture thing. Financials normally would grow at 20%, the NBFC space. Banks normally would. So look, for example, look at the PSU space, which takes about 60-65% of your entire lending network, right? So if you have a problem of a 10% NPA, so 10% NPA at 10 times leverage is 100% of your book value gone, hawa, it's over. So if you have a problem of 10% NPA, would you be lending fresh money or would you be asking your people कि भाई loan देना बंद करो, पैसे उठा के तो लाओ जिसको पैसे पहले पैसे दिए हो. So the entire PSU space right now would move away from growth. They don't have money to lend and the capital adequacy is all gone down the dumps. So the private space is a free run now because those guys are just sitting there. So these 20, 30%, 35% of the private lending guys now have the 100% market ahead of them. So as long as this happens and as long as the NBFC space, there are specialized agencies. So there's 20% growth for the sector. So if a sector is growing at 20, smart guys grow at 30% and super smart guys grow at 40%. So that's the arithmetic that you do. Now if I come and tell you, why not buy a Bank of Baroda because there has been a management change, then the first question you should ask is, yeah, they've got so much of NPA, where is it going to grow from? So now if you've zeroed down on the financial, then you see the cost of deposits, the cost of borrowings, whether they can issue debentures, whether it's an NHB financed loan. So there are two ways to attack it. One is because you cannot charge more to anyone because nobody's going to take a car from you if you charge 1 percentage point just because you've served him a cup of cold coffee, right? So you have to look at a company which can keep its costs under control, which is the OPEX, and which borrows cheap and borrows well. So a company which we own, PNB Housing Finance, somebody should just go and see their balance sheet, not a recommendation. What they did when interest rates were high, they borrowed short. They said in 1 year, we are going to see an interest rate fall. So that's time we're going to go and borrow long. Most textbooks advise an asset liability match. So your assets and liabilities have to match. But money is made by doing an asset liability mismatch. What that means is, in short, short-term rates are always lower and long-term rates are always higher. So obviously you borrow short and you lend long. That's the way to make money. So Repco, when I visited them 3 years back, I can't forget Repco, they said we have a 1 year, 2 year, 3 year, 5 year asset liability match. So at that time I got impressed, but now I realize money is made when your asset liability doesn't match because then you borrow short, you borrow at lower rates and you lend long, you lend at higher rates. There are too many things to look at about that, but basically that's how we go about it.
Okay, good point there. Basant, great speaking with you. Thanks so much for taking the time out and joining us. Always a pleasure speaking with you and discussing some interesting stocks that you have.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.